Hello and welcome to Money, Money, Money. I'm Samira Abdi. As much as Indian investors love the yellow metal, gold has been a thorn in the side of the Indian government, which has been desperate to get a handle on a widening current account deficit, and the government thinks it now has a way to ease this pain. Before I welcome my guest, Hemant Rustagi of Wiseinvest Advisors, let me toss it over to CNBC TV 18's Alexander Matthew, who explores how the three gold-based schemes launched by the Prime Minister could actually help.
आज हमारे वित्त मंत्री जी ने हमें समझा दिया सोने पर सुहागा क्या होता है.
For Team Modi, controlling gold-hungry Indians during the festive season is definitely icing on the cake, and that's exactly what three new gold-based schemes are expected to deliver for the government. The first is the gold monetization scheme, aimed primarily at bringing gold held by households into the banking system. It allows an investor to deposit upwards of 30 grams of gold with a bank for between 1 year and 15 years. Investors can earn 2.25 to 2.5% on the weight of gold as interest. For example, if you deposit 100 grams of gold under the scheme as a short-term deposit, you will receive 102.5 grams of gold at the end of 1 year. That's the deposit plus 2.5%. This is payable either as gold or in rupee terms based on the value of gold on the date of redemption. Now, medium-term deposits spanning 5 to 7 years and long-term deposits spanning 12 to 15 years will only have the option of redemption in rupee terms. The second scheme is gold bonds. In this, the government will sell bonds where the underlying asset is gold. Bearing a coupon rate of 2.75%, these bonds will be open for subscription till the 20th of November. Investors can buy bonds worth between 2 grams and 500 grams of gold. The third scheme is a gold coin minted by the government bearing the Ashok Chakra, which investors can buy from banks. The government hopes to use gold collected under the gold monetization scheme to mint these coins. The hope is that these schemes will not only reduce the need for gold imports, but also mobilize household savings.
बचत के पीछे उद्देश्य होता है कि आपके लिए वो बचत हो, बचत के ऊपर आप थोड़ा कमा भी लें, उसका मूल्य भी बढ़ जाए, और जब वो बैंकिंग सिस्टम के अंदर प्रवेश पड़ जाए तो देश के विकास के लिए उस बचत का प्रयोग हो जाए. उसी दृष्टि से ये तीनों योजनाएं बनाई गई हैं.
But industry watchers say that unless the government throws in some tax relief through these schemes, investor interest may remain muted. Also, they point out that jewelry collection may prove to be a problem since it involves investors trusting government-appointed collection and purity testing centers to provide proper valuations. And that may take some time. So a rush to participate in these schemes may not be immediate. In Mumbai, Alexander Matthew.
Well, there could be a few niggling issues for sure, but we've had some time now to think things through. So let me now hand it over to Hemant. Hemant, what do you think of these schemes? Which one do you like best? And have you already started recommending at least one of them to your clients?
Well, let me begin with the gold monetization scheme, or GMS as it is called. I think it's a great idea, especially in Indian context, considering the fact that we have 20,000 tons of gold lying idle in the hands of individual, charitable trusts and other organizations, and we continue to import almost 800 to 1,000 tons of gold every year, which obviously has a negative impact on your current account deficit and trade deficit, which in turn impacts inflation and interest. So obviously it's a great idea. What the government is trying to do is to convert unproductive asset like gold into something productive, and I think it's a win-win situation for all the three entities, namely the investors, because they earn some interest which is tax-free, for the government because it can cut down his import bill, and for the local jewelers, they get the recycled gold without any import duty. So obviously the gold prices are likely to come down. So I think it's a great scheme. Obviously, as everything else, it has its limitation. We'll have to really go and see how successful it is going to be. If you look at gold bonds again, I think it's a great option for someone who's looking to buy gold for the purpose of investment. It's a very, very simple way of buying gold. It has all the benefit that you get from physical gold, and you don't have to worry too much about purity of gold. You don't have to worry about safekeeping of gold. You end up spending money because you hire a locker or you buy insurance. So clearly there are pluses, but even here there are some negatives which one really compares with other options. But like I said, it depends on what kind of investors are looking at and how they actually consider these two options.
Okay, you keep referring to it as a good idea. So is it that it's good in theory but not so good in practice?
Some of it, yes. That's what I really mean. It's a good idea. Like I said, I gave the context as to why I feel it's a good idea. But if you look at, let's say, GMS, okay, it's basically, we used to have this gold deposit scheme earlier, which was launched in 1999. That scheme didn't do very well. I think there were two main reasons for that. One was the rate of interest was being offered as 1%, and the minimum gold that one had to deposit was 500 grams, which was basically meant for charitable trusts and other religious institutions. This time around, the government has ensured that this GMS is more flexible because the minimum gold that you need to deposit is 30 grams and it can be in any form of jewelry or bar or gold coin, and for the maximum there is no limit. It has three schemes, basically three deposits which are there. One is a short-term deposit which is meant for 1 to 3 years. Then there is a medium-term deposit which is 5 to 7 years, and there's a long-term which is 12 to 15 years. For the medium-term, the tax-free interest is 2.25, and for the long-term it is 2.5. So clearly, if you were to compare this with gold deposit scheme which were there earlier, this is a better option. Like I said again, you are converting your unproductive asset into productive. So as far as these other benefits are concerned, I think there are certain issues which are going to make it difficult for the government to mobilize a lot of gold here.
Yeah, and I think one of the biggest being that I don't know how, as attractive as you may make it, I don't know how one can convince Indians to actually access gold and not possess it, right?
See, this is clearly a cultural issue. Okay, the fact is that it is very, very difficult to convince Indians to part with the jewelry that they have, which they may have inherited from their family. Okay, they are emotionally attached to it. So it's very, very difficult to convince them to part with the jewelry. And this is not the only issue, in fact. Under the scheme, the gold has to be of 995 purity. The fact is, we know that there is one issue that has always been that the gold which is held in as a jewelry is not a very pure gold. So when they come and convert it into gold bars, okay, they are going to lose significant amount of money, which everyone knows today that when they are holding jewelry that this is what happens. But to book a loss, I think, which is again going to be a shock for them. So there are certainly issues, like we discussed, of convincing them to part with it, then to convert it into gold bars. You also lose all the money that you spent as making charges. So there are costs involved, and there could also be issue of how do you, if the fear is that if the tax authorities ask me
but the origin of the
gold, it's going to be very, very difficult, because except for the last few years where the government has said that you have to submit PAN card, there have been some KYC norm for if you buy gold for above a certain limit. Before that, most of the gold was bought in cash, and if you have inherited from the family, there's no way you can justify from where this has come. So I think there are issues, cultural issues, there are issue of having fear in the mind as to how do I explain it to tax authorities, which I think will ensure that.
So when can we expect some clarity on this?
Well, Sumera, you can have clarification only on one or two issues. I mean, how do you address the cultural issues? There's no amount of clarification which is really going to.
No, cultural issues aside, I mean, this tax problem, for instance, could actually turn out to be a really big issue.
Yeah, I think at the most, what the government can do is to clarify that up to certain limit, like if it is, let's say, 50 grams or 100 grams of gold, no source will be ever asked. That kind of clarification will definitely encourage people to come out and participate in GMS.
Yeah, right. I hope actually that comes through. But let's take a very quick break on that note. We'll come back in a bit, and when we return, we'll delve a little bit deeper into both the schemes, gold monetization as well as the sovereign bond scheme, and we'll find out the merit of each. Stay tuned to Money, Money, Money.